What is going on, investors? Hopefully guys are doing well out there. That is right. It is Friday. It's a little 4-day weekend for me, and it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday it's time to talk about the FAANG stocks and the technical chart patterns. You can see across the screen, we got a ton of news to get to, so we better not waste any time. We'll kick things off like we always do with Meta Platforms. Start of the week at 288, drifted lower, but then got it all back, finished the week essentially flat at about 287. WhatsApp crosses 200 million users, and you will have the ability to create ads without using a Facebook account very soon. Meta launched its VR subscription offering this month, starting at about $8 per month. It looks like they have an intro for $1 for the very first month. So, I mean, I don't know how you could not try that if you got one of these things. After that, you pay $8 per month or $60 for the full year. At those prices, gotta imagine Meta will get some people signing up for that. Moving on to Apple, start of the week at 187, and we finished the week up over 3.5% to finish the week close to 194. We popped and topped that $3 trillion market cap over at Apple. The company has done this before in the past, and that was the start of a major slide. Not necessarily predicting that at the current time, but when we get over the stock chart, you'll see Apple's overextended at the current time. Now, Apple's manufacturing partner Foxconn said to invest $246 million in Vietnam for factories. Now, not necessarily related to what Apple does. This will be for 2 Vietnam factories, one including for electric vehicle parts, which if Apple is rolling out an electric car at this point, be pretty surprising. Chinese smartphone shipments surge more than 22% in the month of May. That's actually pretty big news. One of the research reports that I put out earlier this week over on brownstoneresearch.com, link in the description down below if you want to sign up and receive a daily newsletter from myself. We talked about the smartphone shipments basically being in the tank over the past, they peaked, it looks like in 2016, and they've been sliding ever since then. So this is an encouraging sign just shortly before this company reports their earnings. Apple boosted its iCloud storage pricing in several countries, including as much as 25% in the UK. My guess is this probably has much more to do with currency fluctuations, dollar versus UK, euro, those types of things, than it is the cost. I don't think the cost of storing data, in fact, I think the cost of storing data only continues to go down. Maybe it's not exponential like it once was, but it continues to go down. My guess is this is more of a currency thing, so they capture all the margin that they want. Now, moving on to Amazon, started the week at 130, essentially flat. Finished the week right there, about $130. The FTC antitrust lawsuit coming against Amazon in the coming weeks. This has this is merit. Look, I get on here, I criticize the FTC. They've lost cases in court that they really shouldn't have brought against them. In that case, Meta. We'll talk about Microsoft here in a little bit. We'll see the ruling on that case here very soon. This case has merit, and the only reason why I know this is because I sell some products on Amazon, and what Amazon does is they actually benefit online merchants that use its logistics services. So FBA, their warehouses, essentially, I get product, whether I manufacture it or I buy it wholesale, throw some labels on it and then send it to Amazon, and they pick, pack, and ship it, and they do their thing. Well, it's an absolute well-known fact. This is not theory. This is an absolute fact, and I've tested it myself and seen it myself, that even if you are offering the exact same product at a lower price, Amazon tends to put a higher price on the buy box. So when you actually click to buy, you're actually paying a higher price if I have that item and I'm going to ship it out from my house or my warehouse or wherever I'm shipping that item. Amazon absolutely does this. Now, whether or not this is antitrust, whether or not the FTC can win this lawsuit, I don't know. But if this is all, this is a scary headline, FTC antitrust lawsuit against Amazon. It's probably in the end not that scary, and Amazon has the ability to probably win this in the court of law. and we'll see what happens there. Pinterest pops as Wells Fargo upgrades, signing an Amazon deal where Amazon partnered with Pinterest to create, it's more or less, I would assume it's more or less an affiliate agreement where, some of Amazon's content and products are going to be popping up in Pinterest, and Pinterest takes, either maybe a per click or a per sale basis from Amazon. But more interesting, you look at the shares of Pinterest over the last year, they've actually done relatively well. And look, year to date, they're up 20%, but most of these other stocks that we're looking at are up considerably more than that. We'll take a look at Pinterest earnings here, likely in a couple of weeks. EU is looking at self-preferencing in its probe of Amazon's iRobot takeover. So what the European Commission is worried about is Amazon will suppress maybe the search results. So if you go onto Amazon and you search robot vacuum cleaner. Now, if Amazon owns iRobot, obviously they could, look, they own the website. They can put iRobot at the top of the search results. Now, here, and that may happen. I don't know. And look, if that's the only thing that the EU has a problem with, Amazon will probably come with some kind of concession here. The great thing about Amazon is if they can get this deal done, there's some IP that iRobot has as it relates to robotics. I think that's the real treasure trove here. But, and I'm not going to bore you, and because I've done this in the past on previous videos, we brought up iRobot's financials. They are just barely, they're not even financially profitable. But if you strip out their marketing, which I would imagine most of iRobot's marketing, or a very large percentage of it, some of it's going to Google ads, but probably half of it goes to Amazon. Well, Amazon's going to be able to strip that out and turn a company that literally can't turn a profit without advertising into one that actually generates actual income. And for a company like Amazon that has hundreds of billions of dollars in revenue, but not a lot of actual positive net income, well, it's actually a pretty interesting business. We'll see how that goes. Now, Amazon targets Ohio for a big AWS operation expansion. And this is big, $7.8 billion to expand its AWS data centers in the great state of Ohio here in the United States. Microsoft, AWS, and Google may benefit as cloud spending showing, quote, pockets of uptick. Here's how these cloud providers, look, I think the age of cloud, it's still going to have a growth rate. It's not going to have the exponential growth rate that you saw maybe like 2, 3, 4, or certainly 5 years ago. Here's how they don't actually need that exponential growth rate anymore. What you actually need is for the data center to operate more efficiently. And the way they do that is upgrading the CPU chips from either an Intel-based one to maybe an AMD one, or is certainly Intel and AMD continuing to make their CPU cores more efficient, and so it drives down the energy cost. There's stuff you can do with the networking cables. Certainly you could use renewable energy and install renewable energies on these things, but these data centers are energy hogs. And so the real opportunity in cloud is either making that energy renewable by doing a large investment up front and realizing over time, either with solar and wind. And look, I know not all solar sites can afford that, but the actual CPUs and the chips inside these data centers are getting more efficient by the day. Amazon looking to tap local businesses for last mile delivery network. That's why I love covering Amazon. They're always doing like interesting things like this. They're saying you can earn extra income with your business, earn up to $27,000 per year, which sounds pretty good. If you're a local business, that might be your entire look. If you have 1,000 square feet you're operating out of, $27,000 might be your operating lease. So what you're going to do is each day, Amazon's going to deliver packages to your business, and your staff will deliver these packages to customers in your area when you have time during the day, and then basically you get paid. Now, this is interesting because if you're a florist, or if you're already doing delivery, maybe you're a pizza, I don't know if pizza wants to get into this, but if you're already doing deliveries on your own, or maybe like I have dry cleaner, like I can text the dry cleaner, they come pick up my dry cleaning, and then they take it and they bring it back. My dry cleaner can get in on this. And as the guy is driving around that's picking up and delivering dry cleaning, well, he can throw a couple of packages in there and do the same thing. Interesting business model, and we'll see if that... Amazon tries a lot of this stuff, and then they end up doing away with it. But apparently they tried this in India and Japan, I believe, with a lot of success. Moving on to Netflix. Start of the week at $428 per share. moving higher, up 2.8% to finish the week at 440. Potential double strike adds another twist to that Hollywood drama. I think you've got the Screen Actors Guild, you've got the writers, I don't know how many unions there are in Hollywood, but if they both strike, it would have a big impact depending on how long it goes. These strikes tend to happen. I think UPS is going to have one here pretty soon if they don't have one already. That tends to be like the end of the negotiations, like you strike and, so we'll see what happens here. But, any prolonged strike is it's not going to be good. Moving on to NVIDIA, start of the week at 423. Like a lot of these stocks, actually went down during the week and then basically just got it back and finished the week flat at 423. Taiwan Semiconductor confirms a data breach by a Russian-linked ransomware group. Headlines a little misleading because there was a cybersecurity incident at Kinmax Technology. It's one of the IT hardware suppliers to Taiwan Semi. Now they have a data connection, which appears that was breached. Not necessarily something Taiwan Semi proprietary to them, and it didn't look like customer data or maybe any like really sensitive stuff, whether it became like mask or designs or maybe what Apple's next chip is going to be like or something like that. Doesn't look like any of that was in there. Now Taiwan Semi to send more workers to Arizona to quote ramp up that chip factory. So look, I've seen, and I'm not going to call myself a fab expert, but I've done a lot of research on Taiwan Semi, what gives them a competitive advantage, how long it would take for a Samsung or a Global Foundries, which is not going to happen anytime soon. But if one of them wanted to catch up, certainly you look at like a company like Intel, which is talking up its fab, what it would have to do to kind of get back into the same stratosphere or even close to where Taiwan Semi is. And it's a lot about the people. Obviously there's a lot of equipment in the fab, but it's about people and operation and tool usage and all that type of stuff. And Taiwan Semi just has that down to a T right now. And so sending over their best people over to Arizona should make it even better. NVIDIA could see notable impact to revenue on its new AI chip curve. This is probably the biggest story of the week. Now, sit back for a second, because if you don't understand how the situation is playing out, I am going to give you kind of the TLDR on it. As we all know, NVIDIA makes the most powerful advanced GPUs, which are being used to train large language models, and anything related to AI either goes through one of NVIDIA's GPUs, or you're like Google and you're like Meta and you're like Amazon and you have some custom silicon design. Even a company like Alibaba does have some custom silicon, but NVIDIA still has the best software, the best networking, and obviously the best chip design. And so the whole three work together and make for a very cohesive package. So that's probably the biggest reason why NVIDIA stock has just continued to rocket higher and then held these valuations that is achieved. Now, back before ChatGPT even launched, the United States launched sanctions, and this is including a lot of Western countries as well, including Europe. They launched sanctions on the country of China to not allow NVIDIA's top GPUs to enter the country. Now, they also banned the top lithography equipment that could make these. So China could essentially, quote, steal NVIDIA's IP or figure out a way to re-engineer it. And if they had the right lithography machine, they could make the GPUs and be on their way. Well, they don't got access to the lithography machines. They don't have access to NVIDIA's high-end chip, but what NVIDIA did is they clocked down a version of their most high-end chip. And so here's what I've been hearing what is happening is, so China is buying, instead of maybe buying 1,000, we're just throwing out random numbers here, but instead of buying 1,000 of these clocked down versions or the reduced modified performance version of NVIDIA's chips, well, they're buying 10,000 of them. And does NVIDIA care? Hell no, because the margins on those are the exact same as the high performance and full performance ones. And so NVIDIA is happy with these sanctions and they don't really care. The other thing that is happening is NVIDIA is funneling a lot of these GPUs actually to, quote, and we'll put this in air quotes, smaller cloud providers, okay? Oracle's getting some allocation. IBM's getting as many allocation of these NVIDIA GPUs as like Amazon is. Microsoft, Meta, Tesla, they're all getting them. But if you look, there's actually some smaller players that are getting access to this because they're playing ball with NVIDIA on the cloud service side. And these Chinese companies skirt around these sanctions by going into these cloud computing services. So they still have access to these high performance chips, and they bought a bunch of them before these sanctions went into place. And look, geopolitical questions about these aside, and China versus US aside, NVIDIA is playing ball. Well, the US is not having it, and they're thinking about revising and potentially changing these rules in an upcoming hearing. And so we'll see if they do that. If they change the rules and NVIDIA is not able to do this, the company noted on a conference call this week that about 20 to 25% of their business comes from the country of China. Moving on to Google, start of the week at 121. Like a lot of these stocks, just kind of hovered at the areas they're at, down about 1.2%. Finished the week at about 119. Google, Salesforce-backed AI startup Typeface sees a $1 billion valuation after a $100 million funding round. Typeface's platform enables businesses to train generative AI models to use them with their own content, helping with tasks such as producing marketing materials. This is the future of AI, guys. These large language, trillion parameter, every book and thing that has ever been written trained into a chatbot. These are a joke. Like, there's going to be one winner. There's going to be one ChatGPT and one Bard, just like there's one search engine, just like, there's going to be one winner in the gigantic, large, catch everything language model. This is the business model, okay? A chatbot specifically made for marketing materials, a chatbot specifically made for legal professionals, tax professionals, insurance professionals, similar to what Adobe is doing as well. Adobe's creating a series of AI tools strictly for creative, visual, media professionals. That is the future of AI. These giant language models that have all been trained on the same data. They all scrape the same data. Okay. And yeah, maybe Bard is a little bit better at this. Maybe ChatGPT is a little bit better at this. Maybe China makes one that's a little bit better at this, but there's no more room to gain there. There's no more room to gain. And so it's really going to be these more specialized models. And look, I actually think this is probably a good investment. Google will pull out of Canada. Did I say pull out of Canada? News links in response to the Online News Act. And so Canada, announced this. I don't know if they passed this law. I'm not up to date on this type of thing, but they essentially have this law where Google and Meta have to share revenue with Canadian news outlets for essentially kind of like simply showing links to news. And so I don't know what's going on in Canada. This seems to me would slow down the flow of news. And look, maybe, and this is really like tinfoil hat stuff, maybe the people that make the laws in Canada don't want you to follow the news. And Google and Meta are obliging. Google lays off staff at mapping app Waze amid a consolidation. This has more to do with the fact that Waze existing advertising system is being rolled into Google Ads technology. And so they're reorganizing it on that basis. Moving on to Microsoft, start of the week at 334. This one staircased upwards, up nearly 2%. The finished week at $340 per share. The FTC hearing to block that Microsoft $69 billion acquisition of Activision Blizzard concluded, and we should hear the judge's decision here very soon. And this will be a highly anticipated ruling. And if the FTC doesn't win this hearing, they will be like a puppy dog with their tail between their legs walking back to Washington, D.C., and it is going to scare these companies less and less. If Microsoft can win this, it could kick off not a ferocious round of M&A, but if Microsoft can get through this, I think we'll see, because all these companies have tens of billions of dollars, in some cases hundreds of billions of dollars, okay, with nothing to do other than to buy back the stock. I mean, literally nothing to do with it other than that. And so if you can start getting these by the FTC and win them in courtrooms, yeah, you're going to see more M&A activity. Moving on to Tesla, start of the week at 253. This one up over 3%, finished week at 261. We're very much awaiting that Q2 delivery number from Tesla, likely not coming in by the end of the day, certainly not by the end of this video, but those usually cross over the weekend. We'll get those delivery numbers from Tesla. EV charging points in the United States expected to grow fourfold by 2027. This is not a bold call if you just look at Tesla reports the number of superchargers, and I believe the annualized growth rate is something like 30%. It's probably even a little bit higher than that, which means you are doubling the amount of chargers every 2 to 2.5 years. And so, yeah, by that math, in 4 years, you will have grown this by fourfold. I am surprised some of these things get headlines, but, basic math is hard to pull out of some of these financial documents. Industry standards are set to adopt Tesla's charging connector system. This was, I assume this was inevitable. Anybody that's ever driven an electric car, anyone that's ever owned one or rented one or had one for any length of time and tried these stupid charge point ones and the blinks, and if you tried to ever charge your car on anything other than a Tesla supercharger, occasionally you find a good one and it's cool and it works. And it's often free, which is even better. But I've never had a bad experience trying to charge my Teslas at a Tesla supercharger. Moving over to the technical segment of the show, the S&P 500 got rejected at a very common area and then said, psych, we are going to go right back up and retest this area. An extraordinarily bullish situation. And we're butting up into earnings here relatively soon for a lot of these companies. And certainly the major banks will report here in the next 2 weeks or so. An extraordinarily bullish move if you were to push up 4,600 on the S&P 500. I mean, if you do that, the sellers and the bears have lost all control. And I would say, for the most part, the bears have lost all control of this market, because you could still have a meaningful pullback in markets, and it's simply the resumption of an uptrend, which has been intact. I mean, it started in October. I would say it's been intact since December of last year. Moving on to Meta, very logical place for the stock to at least want to take a breather is right here right where the stock is. A little bit higher than that. There's also another area of resistance up here. I mean, I tell you what, I'm shocked that we have this V-shaped recovery. So I am not going to be shocked if we can just bust through 2 areas of resistance on Meta. Wouldn't be shocked at this point, since the momentum is clearly in these names. But at the same time, am I anticipating that? No, this seems like a logical area for these stocks to want to take a breath at these times. And look, it doesn't necessarily happen on a weekly basis. It's something that could play out, frankly, for the rest of the year, maybe. Ideally, we chop sideways for a period of time and then make another move higher. That would be healthy, but look, I can't have my wishes all the time. Now, moving on to Apple, it is just absolutely confirmed. Once you get above these highs, the highs were back here at about, we'll call that 183. And this is the power of momentum. And some of you guys that want like short-term stuff, and you don't have to have these charts and all this line. Some of these lines, I should take off of here. And this thing's probably a little too complicated. You don't need all these lines and all this stuff on a chart. It's meant to, maybe it makes me look smarter. I don't know. I don't really care. But here's just in a nutshell, a great way. And I know traders, this is all they do. And then there's screeners that will do this for you. You look for the stock breaking to new highs. Apple broke to new highs and promptly, very quickly, went up $11 to $12 over and above those highs. It's literally, this is like the easiest trade in the book. Even if you were to acquire Apple at these prices up here, you are setting your stop loss. You can put them right on the highs. Probably what I would do, give yourself a little bit of margin of error. Drop them just below the highs, probably 179 to have kind of a round number. And you just play the upside, play the momentum. Because I tell you what, once you break to new highs, there is no precedent for anybody selling up in these areas. And, obviously you need a presence of sellers to send a stock down. And when there's no track record of anybody selling the stock at these areas, I mean, God only knows where that stock can go. Now, moving on to Amazon, continuing its march higher. There's resistance up here in the 135 to 140 range. And this is a big if. if you bought this stock lower in our green box, which we'd had target out on this channel for a long period of time, south of 100, you're up 30%. You might be up as much as 35, 40% in next week. That's in the span of like literally just a couple of months. This is when I would, think about taking, you don't have to sell your whole position. If you have 10 shares of Amazon, sell one share. Just get in the discipline of taking, like, we all do this to make money. And so when you have the chance to make money, take it and reward yourself, okay? Every big win I've ever had in the stock market, I've done something big. The house I'm sitting in was paid for by buying XPO and a couple other stocks at the perfect time in 2008, 2009, 2010. And those stocks rocketed up, turned it into a house. I bought a very small chiropractic company that I recommended on Seeking Alpha. It was a penny stock at the time, and a couple of years later, it was up over $100, and I bought a gold watch. Those are the two bigger examples, but there's a lot of smaller examples. If I make a couple $100, $1,000, it's a vacation, it's a handbag for my wife, whatever it is. Guys, when you can make profits, it's, don't get greedy is what I would say. Now, Netflix breaking to new highs. There's a gap here. This one looks like it wants to fill this gap from 460 up to 515. That one looks like it wants to close. NVIDIA has very much decided it wants to at least take a little bit of a breath up at this area. You'll notice, I was doing this research for something else, but, look, NVIDIA could go on a slide, a 50% slide, and it would be a fantastic buying opportunity. I think even in this stock, like a 25% slide will feel painful to the people that piled in here at these higher prices. That would be what we're looking for when it comes to NVIDIA. With Google, this one definitely hit resistance here. You can see this is a bend at the end. So when we talk about bends at the end, Google did it. Now, it is, you are doing a parabolic move here. This by no means I would go out and short Google or that this rally is over, but this right here is absolutely a topping pattern where you've rolled over like this and you're making lower highs, lower lows. This one looks like it wants to go lower. You've got a gap or kind of a skip in the chart here between 115 down to, we'll call it like 107. That would be the first area where Google would be interesting, is down here somewhere in here. You could also back test kind of the top of the channel. 115, just south of where the stock is right now, would maybe be interesting. We do have earnings coming up on this stock, and like a lot of stocks coming up in July, a further test all the way down here back to 100. I know that's easy to say. A 20% drawdown in the stock, obviously, as we sit here today, would be easy, but the pain will begin. Okay, so you make this plan right now, and what I would do is, like, let's say, and this is just not just for Google, this is for all these stocks. Make a plan today, because they're all going to reverse, they're all going to have pullbacks. And, to figure out how many shares you want. If we want 10 shares of Google, I would buy like one or two at 106, kind of see what happens. A further pullback, you obviously allocate more. If you find footing here at 106, you start moving higher. You accumulate in that range. Moving on to Microsoft, you could, I guess, from a technical perspective, argue, well, no, I don't. This one may have bent and backtest. I don't know. It's hard with these candles. It's too early to tell. This one also looking like, it didn't quite get up over the highs. I would think it would happen in pretty short order, very similar to Apple. We should be able to get above these highs at 350. That could be a short-term momentum trade. As you play that higher, you set a stop loss at the previous highs. Pullbacks on Microsoft can be bought in, we'll call it 318 area, even deeper than that. I know this sounds like a big pullback, but down back to like 290 would be excellent. You're just kind of resuming this uptrend. We'll see if that materializes. Finally, Tesla continues to break out. Looks great. A pullback on Tesla. And this thing is volatile, not breaking any news there. Pullbacks to, south of 210 probably can be bought. If this rally continues, you're probably retesting these highs up here at 311, which is another, $50 higher. That was the FAANG stock recap show for this Friday, June 30th. Hopefully, you guys have a long weekend like I do, and you have a safe one, and you have time with your family, and you enjoy whatever you want to do in this great country we call the USA. Hopefully, guys, have a great weekend. We'll be back again next Friday. Until then, good luck with your investments.